So O'Sullivan Limited recently completed its annual sales forecast to the end of 2018. It expects to sell two products, Basic at €260 and Deluxe at €340. All stocks are to be reduced by 10% from their opening levels by the end of 2018 and are valued using the FIFO method. So the expected sales for Basic are 1,800 units and the expected sales for Deluxe 1,500 units. So stocks of finished goods on the 1st of the 1st, 2018 are expected to be Basic 50 units at €220 each and Deluxe €60 at €290 each. So both products use the same raw materials and skilled labour but in different quantities per unit as follows. So Basic and Deluxe here. So material A for Basic needs 5 kgs and Deluxe needs 7 kgs of material A. Basic needs 3 kgs of material B and Deluxe needs 6 kgs of material B. Basic needs 4 hours of skilled labour to be made and Deluxe needs 5 hours of skilled labour to be made. Stocks of raw materials on the 1st of the 1st, 2018 are expected to be material A, 3,000 kgs at €4.50 per kg and material B, 2,000 kgs at €5.50 per kg. The expected prices for raw materials during 2018 are material A, €5 per kg and material B, €6 per kg. The skilled labour rate is expected to be €15 per hour. Production overhead costs are expected to be variable €8 per skilled labour hour and fixed €322,300 per annum. Required: A. Prepare a production budget in units. B. Prepare a raw materials purchases budget in units and in euro. C. Prepare a production cost manufacturing budget. D. Prepare a budgeted trading account. You are required to calculate the unit cost of budgeted closing stock of both products. And E. Why is it important that a business prepares regular budgets? So that's the question there. It should take you no longer than 36 minutes to do it and it's 80 marks, so 20% of your overall exam. Okay, so looking at part A there, prepare a production budget. So how many units do we need to produce? So the information that we're going to look for in the question, all stocks are to be reduced by 10% from their opening levels by the end of 2018 and are valued using the FIFO method. So production budget here, our expected sales are 1,800 units of Basic and 1,500 units of Deluxe. Now we're told that we've got opening stock of finished goods here, 50 units and then of Basic and 60 units of Deluxe, right? So that is opening stock. So we don't have to make that, but what we are required to do is to have 90%, okay, at the end of the period. So 90% of the opening stock. So all stocks are to be reduced by 10% from their opening levels by the end of 2018. Okay, and are valued using the FIFO method. So first in, first out. So we sell the ones that we make first, etc. So closing stock is going to be 90% of this opening level here. So 45 units of Basic and 54 units of Deluxe. So less closing stock. So this is our closing stock here. So minus 50 units and minus 60 units. Why are we taking away the opening stock? Because we already have those made. We do not have to produce those again. So how much do we have to make? So we have to make 1,795 units of Basic and 1,494 units of Deluxe. Part B, prepare a raw materials purchase budget in units and in euros. So how many kgs do I have to purchase of each type of material and how much is it going to cost me? So based on the number of units that I need to purchase that I worked out in part A. So this is the information that we're going to need, as well as knowing that all stocks are to be reduced by 10% from opening levels. So both products use the same raw materials and skilled labour, but in different quantities per unit as follows. So Basic material A needs 5 kgs, Basic material B needs 3 kgs, Deluxe material A needs 7 kgs and Deluxe material B needs 6 kgs. So stocks of raw materials on the 1st of the 1st are expected to be, so this is the opening stock of raw materials. So they had 3,000 kgs and they had of material A, and they had 2,000 kgs of material B. Now they purchased them last year, so we don't care about the price there, but the expected prices for raw materials during 2018 are €5 per kg and €6 per kg for material B. So that will be important there. That's how much it's going to cost us this year to purchase those. So let's have a look. How many units do I have to prepare or to buy? So for basic, right, from our part A, we knew that we had to make 1795 units of basic, and they require 5 kgs of material A, so that is 8,975 kgs material A. Material B, we need to make 1795 units of basic, multiply that by €3 for material B, that is 5385 kgs there. Then deluxe, for deluxe we need 7 kgs material A and 6 kgs material B. So multiply that by the number of units that we need to make. So we need to buy 10,458 units of material A and 8,964 of material B, and that's for deluxe. Now we need to have the closing stock in the warehouse at the end of the period, because they have told us that all stocks are to be reduced by 10% from their opening levels. So the opening levels were the 3,000 and 2,000 kgs. So we want to have 90% of that. So 3,000 by 90% is 2,700 kgs material A, and 2,000 by 90% is 1,800 of material B. So we're going to minus the opening stock, because we already have that in the warehouse. We already have that bought from last year. So the budgeted purchases in kgs. So we need to buy material A 19,133 kgs, and material B we need to buy 14,149 kgs. We multiply that by the purchase price, so €5 per kg of material A and €6 per kg material B, and that is purchases in euros, €95,665 for material A and €84,864 for material B. So that is your part B done. Prepare a raw materials purchase budget in units and in euros. Part C is asking us to prepare a production cost or manufacturing budget. Okay, so we want to look at how much is it going to cost us to make everything. What are all of the costs involved in this? So we're looking back at the question, and we already know we've done in part B there a purchases budget. So we know that one of our costs is raw materials. Then you can see here we have skilled labour. So skilled labour is going to be another cost. If we look at the end of the question, we can see variable costs there, and we also have fixed costs there as well. So we've got 4 types of costs there that we'll have to incorporate into our manufacturing budget or our manufacturing costs, okay? So we've got raw materials, skilled labour, variable overheads and fixed overheads. So our production cost manufacturing budget is going to look like this at the end of the day, okay? So it's going to look like that. Now with our raw materials, we're going to have our opening stock plus our purchases minus our closing stock. So we're back to our traditional method of plus opening stock minus closing stock, because the last 2 parts we did the opposite, but here we haven't used the closing stock, so we're not going to charge that, okay? We have used the opening stock. How do we know? Because it is using the FIFO method, so first in, first out. I am using the stock that I bought first. So the stock that I have purchased during this year, the amount that I haven't used is going to be in the warehouse at the end of the period. So let's look at the information that I'm going to use from the question in order to make this. So all stocks are to be reduced by 10% from their opening levels by the end of 2018 and are valued using the FIFO method. So first in, first out, as I've just mentioned. So stocks of raw material at the start of the year are expected to be material A 3,000 kgs at €4.50 per kg and 2,000 kgs material B at €5.50. So we work all that out, and in total the opening stock is valued 24,500. So we've used that this year, so it's going to be included in the cost. Then we add the purchases from our part B, our raw materials purchase budget. In total, our purchases of material A and B are €180,559. Then we take away the closing stock of raw materials, so the expected prices for raw materials during the year. So this is how much our closing stock of raw materials is, okay? And how do I get these kgs? It's our opening stock multiplied by 90%, because all stocks are to be reduced by 10% from their opening levels. So 2,700 kgs by €5, 13,500, and 1,800 kgs by €6, 10,800. So that is €24,300 so far. So when I tot that all up, I get €180,759 is the cost of my raw materials. Now, moving on to the labour cost then. From the question, I can see that skilled labour, I need 4 hours for basic and 5 hours for deluxe, and the skilled labour rate is expected to be €15 per hour. So I know this is from part A, these are the amount of units that I need to produce. So 1795 multiplied by 4 hours multiplied by €15 per hour is 107,700. And then 1494 units that I need to produce of deluxe multiplied by 5 hours multiplied by €15 per hour is 112,050. So altogether that is €219,750. Next, I'm moving on to variable overheads. So my variable overheads, I've got €8 per skilled labour hour. So my skilled labour, I'm going to need to take these hours into consideration as well. So 1795 multiplied by 4 hours multiplied by €8 per skilled labour hour, €57,440. And then we've got for deluxe 1494 units by 5 hours by €8 per skilled labour hour, €59,760. So altogether for the variable overheads, €117,200. Then the fixed overheads are €322,300 per annum. When I add all of my costs together, that is going to be my total cost to manufacture, which is €840,009. So that is part C complete. Part D then, prepare a budgeted trading account. So you are required to calculate the unit cost of budgeted closing stock of both products. So like the 2019 question, we're going to do the exact same thing and find out how much does it cost to make 1 unit of basic and 1 unit of deluxe. So you saw in the last part we have 4 different costs. We've got materials, we've got direct labour, we've got variable overheads, and we've got fixed overheads. So we want to find out how much is it going to cost to make 1 unit of all of that. Okay, so material A. We need for deluxe, we need 5 kgs by €5, that's €25. Deluxe, we need 7 kgs by €5, which is €35. Material B, for deluxe, we need 3 kgs and it's going to cost €6, so that's €18. And then deluxe 6 kgs by €6 is €36. So then direct labour, we have 4 hours by €15 per hour, that is €60. And then deluxe, we have 5 hours by €15 per hour, that's €75. Variable overheads cost €8 per hour. So the basic takes 4 hours by €8 per hour is €32. And then variable overheads for deluxe takes 5 hours by €8 per variable overhead, that is €40. Now, my fixed overheads, I need to work out how much it is per hour because I'm just given a total amount of fixed overheads for the whole year. You can see here that I've worked it out to be €22 per hour, but how did I do that? So I'm going to have to find out how much is my fixed overhead per labour hour. Okay, so to calculate the fixed overhead rate, you need to find out how many total labour hours were involved in production. So for basic, we need to make 1795 units. Multiply that by 4 skilled labour hours, that is 7,180 hours. In deluxe, we have 1,494 units multiplied by 5 skilled labour hours, that is 7,470 hours. In total, that is 14,650 hours. So my total fixed overheads is €322,300 divided by my total number of hours, 14,650, that is €22 per hour. So back to calculating my closing stock per unit. So fixed overheads, 4 hours to make basic, multiplied by the fixed overhead rate, which is €22, that's €88. And in deluxe, it's 5 hours takes to make 1 unit of deluxe, multiplied by €22 per hour, that is €110. So altogether, the cost per unit is €223 for a unit of basic and €296 for a unit of deluxe. So the closing stock of finished goods then, 10,035 altogether for all of the basics, that is 45 units is the closing stock multiplied by the 223 that we've just worked out there. And the basic closing stock altogether, 54 units by your €296 is 15,984. And how did I get these? That is 90% of the opening stock levels. So I can do my budgeted trading account now. So my sales from the question are 1,800 units by €260, and then 1,500 units by €340. Altogether, your sales €978,000 there. Less the cost of sales. So the opening stock of finished goods, 50 units by €220 plus 60 units by €290 is equal to €28,400. The cost of manufacture is coming from part C, that is €840 and €9, and then a minus the closing stock of finished goods, which is 45 units by €223 plus 54 units by €296, and that is €26,019 closing stock. So altogether, cost of sales €842,390. Take that away from our sales, and that is a gross profit of 135,610, and that is part D complete there then. Part E then, why is it important that a business prepares regular budgets? So, budgeting is part of the planning process. It is a financial roadmap for a business. Budgeting helps define areas of responsibility for staff and motivates staff to achieve targets, improves communication, and builds teamwork. The resources of the organisation are used as efficiently as possible, and it can adapt quickly to changing circumstances. Budgeted figures can be compared with actual performance. Adverse variances can be investigated and action taken to ensure it does not happen again.